A warm welcome to the Economic Times Financial Inclusion Summit 2014 series. Let's put our hands together as I welcome Mr. G.S. Andhu, Secretary, Department of Finance, Government of India. A warm welcome to you, sir.
Dignitaries on the dais, my colleague Mr. Sharma from Madhya Pradesh, other dignitaries and ladies and gentlemen. I'm very happy to be present here in this very important summit. Financial inclusion as a program, it started somewhere in 2005 with the Reserve Bank of India taking initiative in this area. And then 2006, we started the branchless banking system in India, what we now term as business correspondence. So in the small areas, it was the branchless model which was followed. And this continued. And in the year 2011, a major push was given in the form of a campaign called the Swabhiman program, under which the banking services were sought to be taken to the unbanked villages of 2,000 plus population. Beyond that, it was the families, it was the households. So that was left to the banks. But still, what we saw was that a large section of the population in the rural areas particularly, and also in the urban areas, it was still not connected. The Honorable Prime Minister, he announced in his Independence Day address, Pradhan Mantri Jan Dhan Yojana. So Pradhan Mantri Jan Dhan Yojana is basically a financial inclusion plan in a mission mode. Now what is this program? The program is, of course, the first basic thing is opening of a basic savings bank account. So this account can be opened even with a zero balance. Even if you don't have anything in your pocket, you can still go and open the account. And the KYC norms, they have been liberalized, they have been relaxed at the local level. If you don't have any address proof, the local level functionaries, they can certify your address proof, and that can be sufficient to open the bank account. If you have a Aadhaar number with you, then it becomes all the more easy. Then you don't require any document. Give your Aadhaar number, and that will be fed into the micro ATM or the kiosk, and automatically the particulars of the person will come out, and that will be fed into the banking system. So now all these accounts, they will have a debit card with the inbuilt facility of accident insurance of 1 lakh. That is inbuilt into this, for which no one has to pay anything. It is being paid out of another fund that has been created. And what we want to achieve is that we want to convert the cash transactions into cashless transactions by propagating the use of debit cards, installing more and more of ATM machines and more of POS machines. We hope to track village-wise progress. So those villages which will have 100% accounts, will keep on declaring them as financially 100% included. And hopefully we should be able to do a satisfactory job of this. So I'll conclude here. Thank you very much.
Ladies and gentlemen, we now begin with our first panel discussion, Economic Inclusion, Key to Financial Inclusion Success.
Very exciting morning today. The topic of today's discussion is economic inclusion and how financial inclusion is a key towards economic inclusion. And once economic inclusion is there, we can look towards economic development. Financial inclusion has up till so far been meant by giving the basic services to the unbanked people, which means providing them the products and services at an affordable cost to all those low-income groups, the haves and the have-nots alike, and to make their lives better. But then it has remained up till now only up to an opening of an account, but the facilities which we had envisaged to provide them some sort of a finance also, that is yet to happen. With this new Jan Dhan Yojana, Prime Minister Jan Dhan Yojana, many things have to happen. And as we see that not only we'll be opening the accounts, we'll be providing them some overdraft facility on the maturity of those accounts, and also providing them insurance, micro-insurance, as well as in a later point of time, it will be also seen that those, the unorganized sector, that is the pension sector, can also be brought into the folds of the masses. I feel that this Jan Dhan Prime Minister Yojana is a very effective and widespread implementation strategy which is taking place. And in a mission mode which it is happening, it is likely to give the results which we are envisaging. But then, if in case we want to have success, it is very necessary that the business models which we are having may not be the same. New and innovative approaches may have to be taken up so that large population of India can be covered, not only with the account opening, but all banking services, credit facilities, skill upgradation, and employment opportunities. So as time goes further, we'll have to see as to how this financial inclusion can lead towards economic inclusion. I'd hand over the stage to Mr. Abhizar Dewanji, the partner and national leader of financial services in EY, to give his views about the financial inclusion and how it can contribute towards the next level, that is the economic inclusion in this country.
First of all, this is for the first time what I have seen, that there is a government-wide approach and not necessarily a bank-wide approach towards inclusion. So the government has come about and said, we will provide the commitment, we will provide, as the Secretary said, the publicity and the awareness, we will link it with financial literacy, and we will ask people that now come and set up a bank account. Again, along with that, the support system has matured. We have mobile ATMs, we have mobile phones, we have ability to transfer money, we have opened up the BC sector. So we have provided the infrastructure for people to use credit. Again, on the credit side, we are moving towards a direct benefit transfer, which comes straight into somebody's bank account for him to use. But what is important to know is that we have now created or now going to create a national level infrastructure and a national level commitment to say inclusion should happen. And by the way, inclusion as far as banking is concerned, to a great extent, inclusion was something which was thrust into banking. We have had an ecosystem. We had regional rural banks. We have urban cooperative banks. We have now MFIs. We have NBFCs. These are nothing but last mile providers. They are the kiranas and the retail stores that we have. As long as the banks can provide them wholesale capital, it is their ability to go down the stream. And by the way, for them, that model is a very profitable model. NBFCs are operating on a very good ROA. And if you provide them the capital, they will do even better. MFIs are making a reasonable amount of money such that the net interest margin on MFIs is capped. There's a 10% cap now. And by the way, if there was no demand, there was no need for a cap. There is a demand. There are people who are willing to pay because their alternative is to go and borrow money from a moneylender. They want to do it, but they need the trust. For the first time they are entering the system, they need the comfort, which is the last mile connectivity that the MFI or the NBFC actually provides you. So we have an ecosystem ready, and that ecosystem is functioning. We need to fuel it much better. So it is not only the responsibility of the banking sector, it is the responsibility of the financial services sector to make sure that gets delivered. So really, inclusion will happen at a local level, will happen by only specialized individuals who have got the skill to do it, who have the ability to go that last mile and do it, and whose profitability depends on going to that last mile and doing it. Your kirana can have a POS, and the money can be withdrawn. The mobile ATM can move around and cover 50 villages. That can happen. Now, under the PPI scheme, at least, which is not a banking, the payments provider scheme, you can actually have clubbed accounts. So the kirana will have 100 accounts, which will flow up into one central account being managed by the bank, and it is profitable for that bank. So this is nothing but an ecosystem that we are trying to develop, and I think once this ecosystem develops as part of inclusive growth, financial inclusion has to happen because it's just waiting to happen. Thank you.
Thank you, Mr. Diwanji. I think you have very beautifully put as to how financial inclusion should lead to inclusive growth. Now I would like to come to Mr. Amra Pavanatham from DMT from NABARD. And what I would like to ask him is to talk about the new models on which the finance can be provided and the skill upgradation and wealth generation can happen.
Thank you, sir. The distinguished dignitaries on the dais and friends. What is financial inclusion and financial economic inclusion you are talking about? The SHG movement was started in providing, first it started with the savings. Savings is the basic product of any financial product. So it started with the savings and given a small dose of credit to the people, and it started 20 years ago. Is that not financial inclusion? It happened 20 years ago, not in 2008. So let us be very clear about, we are having one of the world's largest financial inclusion program running in this country for the last 20 years. And we should take pride of it. And when all our partners, wherever we learned this SHG movement in the world, all have failed. Because first of all, there was not savings linked. The second, it was not mainstreamed with the banking system, which we successfully did in our country. And we are adding more and more dimension to that. Technologies have come, players have come. We are including all of them into enhancing this outreach. But what happened to the people who borrowed money? Whether their enterprise is sustainable, that family is sustainable, the borrowing is sustainable or not. If we look into all these things, then it gives a lot of the insights into the suicides that has happened. Because the credit is not put into productive use. There was multiple borrowings. There are indebtedness. Indebtedness means that there is an access to credit in many sources. So therefore, the financial inclusion has to follow with financial education. Financial education is like a family budgeting. It helps people to understand how to use this credit. And approach of NABARD, I would like to say that, has been that advocacy and cooperatives. Now we have successfully mainstreamed 240 cooperative banks with our intervention as a CBS enabled. Up to last year, until last year, they were kept outside the financial inclusion. And because of our efforts, we are able to mainstream 250 banks. For the time, now itself, now we have taken the projects like Watershed, you must have heard, Watersheds and Wadi projects and producer organizations. In this, one of the main ingredients is that now we are going for individual account opening in addition to the group account opening. So that this mainly because of the DBT, the direct benefit transfers. Okay, because group account opening will not enable the direct benefit transfer. So therefore, we are doing this as part of the integral system. And then the partnerships, I think nobody else is working with such a large partnership as NABARD. We have more than 3,000 NGOs in our fold, and all RRBs, all cooperative banks, all commercial banks almost. So it's a very big network that NABARD is operating through. And then we are also providing a lot of materials. If you see the even SHG materials, it contains about the social empowerment. That is part of economic participation, social participation. And also the financial literacy programs are doled out through the SHG meetings, etc. So therefore, financial literacy is also, especially keeping the women in the forefront, because they are the best savers and investors in our country, by culture. So therefore, these all to be taken on board when we are talking about financial inclusion. With this, I conclude here. If anybody has, we'll have some.
Thank you very much, sir. I'll now move to Mr. Bansal. Mr. Rajesh Bansal has been the Assistant Director General in UIDAI, and he has been spearheading this movement of financial inclusion in a big way and has been trying to put the Aadhaar into the banking system. How UIDAI is essential for financial inclusion, how actually it will create a very strong platform, not only for financial inclusion, but for the entire country as an identity for them, for going anywhere, opening of accounts, social security benefits. And I would say, if I presume correctly, it may be just like a social security number which we have in other countries. UIDI will become the most important number, and every person, not only the rural or financially excluded people, Aadhaar card has to be taken by one and all. That is my understanding. I hand it over to Mr. Bansal for his comments.
Thank you, sir. From the time that September 29, 2010, we issued the first Aadhaar number. We had only one vision which we have been trying to pursue, and that vision is what all of you share. So we are thankful to you for that. And that vision is what we share with 1.2 billion people in the country, is that everyone should have a right to prove their identity. So this is where the vision we started with, that each person residing in this country, the 22 crore people, should have an ID. That ID, we realized, can never be a token-based ID, because if you are going to issue a card-based ID, it's not going to take us anywhere. So we realized that it has to be a digital ID, which has not happened anywhere in the world. Forget at that scale. Salvi says the largest online digital ID in the world is what Aadhaar platform offers today. We have about 70 crore people already with a digital ID enabled in this country. So if you look at the number of unique banking individuals today, I'm not sure. I would put my finger at a figure of 25 to 30 crores, unique banking individuals. And today, there are 70 crore people with a digital ID. So that's I thought I'll put some things in perspective. Now, broadly, my other speakers and everyone, Secretary has said we need 3 A's for MATE to work. We need an account for everyone. Second thing, you need an access to credit. And for all of this, you need an access point. The fourth A comes in, that is Aadhaar. Because Aadhaar is a digital ID, one can ensure that everybody can be uniquely identified. Everybody can be uniquely identified. Using eKYC, an instant account can be opened, and the account opening time will be reduced from 2 to 3 weeks today to 2 to 3 minutes, and it happens today. Low cost for the person, aasan for the person, and cost effective for the financial institution. As far as credit goes, with everybody in 2015 having an Aadhaar number, 1 billion people will have a number, 1 billion people can be uniquely identified, and there will be 1 billion credit histories available for the banks, for the financial institutions to seamlessly access and allow credit to be afforded. Otherwise, it can't happen. Microcredit REST models could develop. I don't want to go into details of that. And with Aadhaar comes the ubiquitous factor of authentication. If you and I have to do a financial transaction, you and I use my signature or a PIN or a password. How do you expect a Radha sitting in Timbuktu to use a PIN or a internet banking or an, a mobile banking or any other access point? What we have enabled is these 10 pins and the 2 irises. 12 pins available, ubiquitous to all 1.2 billion people. Today, 700 million people have it, which means that everybody will be empowered to do a digital transaction, whether it is at a fertilizer shop to buy fertilizer, whether it is to buy seeds or to pay for grocery.
I now move over to Mr. George Anthony, MD and Country Head of UAE Exchange, to tell us as to how NBFCs can really go forward in contributing towards financial inclusion and economic growth of the country.
From the NBFC side, I would say that the government, finance ministry and the RBI should equally give some weightage to NBFCs to be part of this financial inclusion program in the account opening process also. The NBFCs do lots and lots of work in the last mile servicing of this category of people. If they can be allowed in certain way to open accounts for these customers, I think they can make a big difference in financial inclusion. And it's possible with some technology controls and put in place. At least, for example, earlier there was no AD2 in foreign exchange, there was only FFMCs. We went to RBI, explained that there are big players, well-managed, compliant companies which can be elevated so that they can do better service. Likewise, NBFCs who are compliant and performing well can be elevated to bank or to a certain category where they can open deposits for SP accounts for customers, by which, if that is allowed, a new class vertical will start for this financial inclusion in a big way, and that's a business opportunity for us. Plus, we handle the last mile villages or branches. Most of the NBFCs work in the villages and MFIs work in the villages. So it can really help in financial inclusion, because meeting customer, talking to customer is the most important thing, whether it is an SB account or saving account or giving credit, or which is hardly happening now. So that shortage can be covered by scaling up this to other financial sectors also. Thank you.
With this, I would like to close the discussion. Thank you.
Moving on, we have a very special address indeed. Let's put our hands together as I invite on stage Dr. Aruna Sharma, Additional Chief Secretary, Panchayat and Rural Development, Government of Madhya Pradesh, to share with us the Madhya Pradesh Samriddhi model.
Ladies and gentlemen, this Pradhan Mantri Jana Dhana Yojana is what we have said is way to Samruddhi. Samruddhi is prosperity, as you know. And the Madhya Pradesh financial inclusion model was termed as Samruddhi, on which we have been working for last couple of years. Whenever we are making a policy, who is at the center? My convenience, our convenience, or the convenience of the individual, who is the ultimate beneficiary for whom we are building up this entire edifice. And that is where we had been working upon as we moved ahead with this Samruddhi. Madhya Pradesh went about for a common database. Why did we go for a common database? For the simple reason, if the government MIS is to build with your banking system, the bank goes and opens the account. But to all G2P, if we want to route through it, it is very, very important to know the family. 90% of our calculations in the MIS system is based on the family. So in the Samagra database, we have a family ID number, the unique individual ID number, which is linked to the Aadhaar wherever Aadhaar number is there, and linked to all other numbers of the government. So whether it is a NREGA number, whether it is a contractual labor enrollment number, whether it is a BPL number, whether it is XYZ number. Once we put all these things put together, the entire government MIS has been built on this edifice of Samagra, so that all entitlements are thrown by this MIS, and because your account number is linked with this number, automatically all G2P payment is flowing through this. In the financial year 13-14, we transferred more than 6,000 crores, and from April till now, we have transferred more than 8,000 crores through this system, all pensions, all scholarships, all your PDS systems, and now this year we are going to add the agriculture sector and the health sector into this whole system. We shifted the complete paradigm shift from population norm of 2,000 to geographical norm of 5-kilometer radius. The statistics of last nearly 1 year and 8 months is the average deposits in an account of no frill used to be 50 rupees have gone up to nearly 2,300 rupees. Not only that, a small pensioner getting 500 rupees pension started a recurring deposit of 50 rupees per month. So in the sense, you are introducing them to your different financial products so that they don't require that money immediately. And that kind of a money is available in the system for you to give the credit. The credit worthiness record started getting built up as you are moving ahead into the whole system. So now you have everybody, we opened additional 16 lakh accounts into this whole process when we got into it. Then in the remote areas, the structure, what we are ultimately aiming at is, there is a small value branch, a full-fledged branch, catering with 6 to 7 ultra small banks within 5-kilometer radius, and a debit card, a RuPay card linked with the MIS entitlements. So whether it is you are paying for the crop as a minimum support price, or whether you are paying the social security benefits, whether you are paying under subsidy of various schemes where the cash transfer is there, any of these systems will get built upon it. Second thing is, like being a debit card, the moment we put on the PDS shop, the POS machines, all your transactions in the PDS cards will again get through your banking system of whatever 1 rupee, 2 rupee kg rice or whatever they are buying into the whole system. And of course, the M-Pesa, what we are going to try in one district of Madhya Pradesh, 100%. So I think I'll stop at this stage. Thank you.